Today we have Rich Day, who is the founder of the Rich Day Group, a real estate investment firm that focuses on multifamily and industrial projects across the Intermountain West. For the last decade, Rich has sponsored the acquisition, development, and or construction of more than 4,000 apartments, 250 townhomes, and over 3 million square feet of industrial and office space. Rich is currently developing nearly 1,200 apartments, additional 250 townhomes, another 500,000 square feet of industrial real estate. Rich is an active philanthropist, sits on the board of the Tony Finau Foundation and Intermountain Healthcare Philanthropy Board. So with that intro, welcome in.
Thanks.
It's quite the background.
Yeah, I'm listening to your numbers and I was like, oh man, I gotta update my bio.
Yeah.
We got a lot more going on. Unfortunately, I didn't update my bio before I let you know I was coming down. But yeah, we got a lot of good things going on. So kind of fun.
Well, that's great. Well, again, glad you're here. I've heard really great things about you.
Oh, thanks.
From being within the real estate world for the last few years.
Thank you. That's awesome.
And here in Utah. And so glad we could connect and talk about your story.
I appreciate it. Yeah. I think anytime you can kind of get to know other people, especially in the same network, same, I guess, environment, you kind of get to know other guys who are not a part of your, I guess, core network and expand kind of out of that it's a good opportunity.
Yeah, 100%. Well, Rich, the first question I typically ask my guests is just to talk about your upbringing a little bit and, formative years, teenage years, maybe any events or things that happened, whether in high school or early college that formed who you are today.
Yeah, I like that. I don't actually go all the way back that far usually. So that's actually kind of fun. I think, starting all the way back, I grew up, my dad was actually raised by his grandparents, my great grandparents. And so we lived in West Valley, until I was about 10 years old. So I grew up in West Valley. It was very different from where I live now. I live in Bountiful. And the transition at 10 years old from, the stuff I was seeing in West Valley and experiencing there to Bountiful was pretty eye-opening, pretty life-changing, honestly. And I got to a spot where I actually felt like I stepped back in time where, West Valley I remember kids my age in the second, third grade that were smoking at recess, sneaking cigarettes from either their parents or grandparents or wherever they were. And to go into Bountiful where I actually don't think I saw anyone smoke ever anywhere around town. And so it was just a very different way to grow up. But actually do quite a bit of development in West Valley. I love the city of West Valley. They've been phenomenal to work with. They're really progressive in terms of wanting to change the brand and reputation there. So when I grew up in Bountiful, in fact, the person that I was assigned to when I moved, because I moved midway through the year in the fourth grade, was assigned to a friend who unfortunately has passed away since, but he connected me to who kind of became my best friend growing up. His name was Sean. In fact, my son, my youngest son, his middle name is Sean after Sean. That's how important he was to me in my life. And he was one of 6 boys in their family, and I had just 3 sisters. So it was nice for me because then I felt like I had brothers, and I think I got beat up by his older brothers. We used to wrestle in that, but they literally became another family. And so I refer to his parents as mom and dad, and he refers to my parents as mom and dad. It's nice. Really, really neat to be able to have, the book Rich Dad Poor Dad. I'm reading it and I'm thinking, this is me. This is 100% me. I mean, my dad growing up was a psychotherapist, and so it was, my buddies joked like, I never got in trouble, right? Like one time for Christmas, I asked for a motorcycle. My dad did not want to give me a motorcycle, and so he said, "Look, I'll pay for half of it. You pay for half of it." And we're talking about a Trail 110. I think I paid $400 for it. So I paid $2, he paid $2 for Christmas. And one night I snuck it out, right? At 14, I was like, I'm going to ride this to my buddy's house, and wrote it down there. And of course, this is the time of landlines at 14, and he calls and I answer, and he said, "Hey, how's it going?" I said, "Good." He said, "How did you get down to Darren's house?" I said, "I rode my motorcycle." He's like, "Great. You can push it home, and then let's talk when you get home. I was like, okay. I was like, oh man, here we go. Yeah. I got home and gave my dad the keys to the motorcycle, and he's like, I don't want this. He's like, I just want you to know that I'm just a little disappointed in your decision. And I was like, man, I would have loved you just take it away for 2 weeks and give it back than to tell me you're disappointed in me. Like, I'm like, I didn't want to let you down. And now it's like, now I feel guilty. But I fell in line with the rules after that. I never took it back out. And so that was kind of the psychotherapy of my dad. And then Sean's family, Sean's dad started a software company. Started in the early 80s, sold it in the mid 90s, did very, very well. I actually don't even know exactly how much he sold it for, but it was a different intro to life, you know, where my dad was very budgeted, and the most we ever spent on a family vehicle, he was proud of it, was $2,000. And it was like, we're not gonna spend a lot of money. We're gonna pay cash for everything. And to go from that to Sean's dad, his dad had a Lexus. And at the time, like, we would just sit in there and I would just smell the leather. And I was like, this is what I want. I don't want a $2,000 budget. I want to be proud of that. This is what I want. I want to go after this. And so Dean became, who's Sean's dad, Dean became honestly, I mean, a second father to me, and really the mentor in my life to look after. And I would bounce business ideas off of him. And he was always so good and supportive of, I mean, if anyone can do it, you can do it. And it was never, it was never like a hardcore, like, I wouldn't do this if I were you. And, you're making a big mistake. It was, hey, believe in yourself, work hard, and you'll achieve great things. So he's been phenomenal to me. So I feel like I've been talking a lot, and I could go, I could tell you some stories,
keep going, because I try to do as little talking as I can in these things, just because I feel like I'm not adding much value here. So,
go ahead, man. That's not true. But anyway, so as we got older, got into high school, graduated high school, and we always, it's one of those things that I get asked a lot, in terms of like, when did you start, this path of direction and that you're going? And it was funny, at the age of 14, I remember getting picked up from junior high school by a gentleman named Ron. And Ron had a son that had some disabilities. And so it would be funny. Ron would be driving, and then his son, and then me, and then my other buddy. And there would be four of us in the cab of his truck. And he would just go and drop us off at somebody's yard and say, all right, I need a trench dug from here to here, and I'll see you in 3 hours. And then my buddy and I would just dig this trench for 3 hours. And then, for us, we're making $5 an hour at 14. I mean, that's how I was able to buy my motorcycle, is just learning how to work. And that was really what it came down to, was just, the word grind is used a lot. Yeah. And ultimately it comes down to your ability to work and know how to work. I never fancied myself as somebody that was super smart. I, did school up the U. I did, I interviewed some schools back east in that, but ended up doing an MBA program at Westminster. It was great. Had a good experience. But it came down to the fact that I was spending, 60, 70, 80 hours a week just working. Yep. And started my career actually doing on the finance side of real estate, and realized pretty quickly I wanted to be on the equity side. Mm-hmm. And when I was just finishing up my MBA, had an opportunity to go work at Orchard Securities here locally. Yeah. They're a managing broker dealer. We would raise raise money for institutional real estate all across the country. So fly into San Diego. This is when I was, 27, 28, would fly into San Diego. I'd have a sponsor client. They had, at the time, 19 sponsor clients. And so I had half, another gentleman had half. And we'd just drive up the coast and would meet with independent broker dealers, family offices, RIAs, and raised money for other sponsors' projects. And so really it was a great education. It was more than the classroom stuff. In fact,
Yeah.
it was funny as I was finishing up my MBA and that it was funny how many guys that I went to school with that would come up to me afterward and they're like, no, how did you get into this? And the reality is I just got lucky with relationships, some of the relationships I had, and was introduced to Orchard Securities, and they were great, had a great experience there. I had to go get licensed Series 7, and then ended up going on my own, which is really how, I kind of played with different names. I did 3LP, which is, I don't even remember what I called it. Not 3LP, that's third party logistics, that I was thinking about. I can't even remember the name now. I had come up with something about.
Was it Stay or Chartwell?
No, those were post this. This was just because I was being a third party equity raiser. So I would raise money for other groups. And so I raised money for a group out of Beverly Hills, and I raised money for a group out of Philadelphia.
Okay.
And so they would do different real estate. They would do different areas. And then in 2008, the world came crashing down. And so nobody did real estate, nobody did private equity. And I was doing private equity into real estate. So it was a rough 3 years. Like,
I can imagine.
Oh yeah. I mean, I talk about cars, and it was a time, and my buddies all tease me now, but I ended up selling everything I could. I mean, I was siphoning gas out of my lawnmower to put gas in my car to make it to work. That's how tight money was. My wife is a dental hygienist, and at the time she was working some days 6 days a week because everybody needed, dental hygiene.
Right.
And so she worked for these dentists, and honestly, if she didn't have that income, I mean, we would have been in real big trouble. But gratefully, she put in the work, and I was interviewing constantly. I was trying to think, well, gosh, maybe I venture out of real estate, and I interviewed with some groups doing an offer to go work with Stryker Medical. I was like, man, do I go sell medical device? I know people that do well there. And I was so burned by the cyclical nature of real estate that I was like, man, I don't like this. I don't like I was pretty young in my career, but to go from where I was like, man, I'm never going to make X amount again to dropping down to like making zero for several months. Actually, more than a year, I didn't have an income.
Wow.
So it was, real estate was like, I loved it. I loved everything about it. It was just the downside was really scary. And it was different time then. Yeah. So that's when I had partnered with a local builder up there in Bountiful. And then we actually it's funny, we were, in real estate, you kind of have these soft partnerships where you go and you work together on a couple of projects, and either you continue to partner, or you're like, hey, look, we're going to go a different direction. I'm going to do the different direction. I've done deals with dozens of people here in the Valley between, partnered with the Boyer Company, partnered with Bridge Investment Group, done some stuff with Angelo Gordon, done some stuff. So yeah, it's kind of that's one of the nice things about real estate is you have this box where you do these deals together. And so, have a good relationship with both the guys I used to do work with. One ventured into Austin, Texas, and I don't know the Austin market, so he's out developing that. The other really was focusing on the deals he was developing and building. And so if there was a piece of ground he could buy and I could partner on, raise money for, he would do the development in real estate, or the development and construction, and was more focused on that side of it in the industrial. And so I was like, I really want to stay the path of multifamily. And that's when I still own stuff with both of them. And really just went out on my own, kind of do my own deals, purely focused on multifamily and industrial.
That's awesome. Well, yeah, that's a fantastic background, Rich, and thank you for giving the context. Just a couple of follow-up questions and things that I took from that. So yeah, you mentioned your upbringing sounded very, very formative, and you mentioned Rich Dad Poor Dad, which, yeah, like you said, sounds like that was your childhood to a T with your father and your friend's father. And That's such a great book. If anyone hasn't read that, I definitely suggest doing so. So when you got your undergrad, did you go straight into your MBA?
No.
Or did you was that where you worked for Orchard? No, Orchard was after MBA. What did you do between undergrad and MBA?
Yeah, great question. So I actually, kind of a funny story. It was I had finished my undergrad and had started my interviews, and that's when I went and started interviewing with these other groups. But I also had started just doing financing on the side. And so not on the side, but through college. And then I was like, I'm going to really jump into this finance side. And so I was financing everything from residential mortgages to small commercial projects. But it was one of those things that, like I said, it was I didn't love, say this the right way. I wanted something a little more sophisticated. I knew what was happening on the private equity side, on the more institutional side of investing in real estate, and I was looking, on the outside looking in. So, and actually, when I was originally talking to Orchard, I came on as a due diligence analyst, which for me is the worst job ever because I just don't have the patience or the, honestly, the personality to just sit and read a private placement memorandum or prospectus and do a breakout of sources and uses and then, load that into performance. But it was a great education. So I did that. I was in the due diligence team for not long, 6-8 months, something like that. And then I kept bugging the equity guys, like, hey, if there's a chance, like, let me go out and raise some money. Like I know I can raise some money. And so they were just like, I'll be patient. And then an opportunity came up, for me to jump in on the equity side. And it was awesome. I mean, the nice thing at the time was, I think I was 28 or something like that. I didn't have kids.
Got it.
So my wife was working as a hygienist and I was flying, all over. I mean, there'd be 3 weeks where I didn't even come home, where it was like, because we'd go in, like I said, San Diego, drive up into LA, and then would fly from LA into San Francisco. You'd go from that to a conference in Dallas, and then you'd go, hit stuff on, I didn't hit the East Coast a lot, but it was enough that it was like, the East Coast stuff when I would go out to Philly, you spend a day traveling and a day traveling back. It felt like a lot of times. And so it was a lot of time on the road. And like I said, I didn't have kids at the time. And so it was easier to do that. But so that was, I actually started, I was finishing up my MBA working at Orchard. And then eventually when I finished the program was right at the time that I went independent, right shortly thereafter.
Okay. So you were with Orchard during your MBA and then decided I want to do this on my own.
Yeah.
You were licensed and it was like, let's go.
Yeah.
And was that, how long were you out on your own?
Well, it was about 10 months before the market crashed. Yeah. Okay. So I graduated, with my MBA in, my goodness, I'm getting all my, it just goes too fast. I think it was 2008 when I graduated. Okay. So it was right then when everything kind of hit the fan.
And then started scrambling.
Yeah, that was a scary time. And that's actually why I've actually diversified a little bit in what I've done. And a friend of mine approached me about 8 years ago and said, hey, I've got this product that does water filtration for hospitals and labs. And love to get it going and would be interested to see what you thought. And the reality is he actually came to me originally and said, hey, this group has approached me about partnering with them and said, this is what they're offering me. And I was like, well, I'll fund it. And because again, in my head, I'm like, when that down cycle happens, I want something that's outside of real estate to invest. Mm-hmm. And so we started MedWater Systems and he ran that every day. I just focused on real estate. And, when we needed some capital, he'd call me and would figure out what we needed in terms of financing. And so I helped fund that. And then we went from, our goal was, gosh, if we could sell 50 systems a year, it would be amazing. And we went from 8 systems to 18 systems to 48 systems to 96 systems to 130. So now we're doing, anywhere from 150 to 180 systems a year, wow. Which is great. What's great about it is there's some residual that comes with it with water usage. So the systems need maintenance and updating. And so it was like, gosh, this would be great. So now, we sell into the Mayo Clinics, Sanford Health, St. Elizabeth's, and we're doing a lot. We're under NDA with another publicly traded company that could be a lot of fun. I'm pretty excited about. That's still kind of rolling out. But then it transitioned me into, and this is totally different than real estate, but it transitioned me into learning about the water business.
Yeah.
And we ended up acquiring another water filtration company out of California. And now we actually just got our last stamps from the president of Senegal to do a whole water system in Senegal that would be, close to $200 million water system in Senegal. And that's one of many projects that they have just because they need water. Well, then the state of Utah, we just received a grant from the state of Utah to help produce a water filtration system to help save the Great Salt Lake. So Governor Cox's focus on the Great Salt Lake is he's been very vocal about it. Sure. He's allocated, $500 million in resources to help save the Great Salt Lake. About half of that's really to focus on the Great Salt Lake. And then the other half has some other things to it. But, we're working on this grant that was awarded to us. We have a system that we're bringing up that we have a lot of proprietary and patents, 24 different patents on this product that we can actually extract minerals from the Great Salt Lake, but then replenish the water back into it. So it's going to be fun. I'm excited to see what's next. This is just new. Well, we've owned the company for a couple of years. It's a 25-year-old company that we've owned a couple of years, but the agreement and the negotiations we're working on with the state of Utah has been within the last 5 or 6 months.
What's the name of that company you acquired?
That one's AMPAC, A-M-P-A-C, AMPAC, AMPAC Water Systems, or ampac1.com is the website.
Cool.
But MedWater Systems was the other one. So we have the hospitals and labs, and then we have AMPAC that does the big municipalities and stuff like that. So again, I talk about them. I'm not in the day to day.
Sure. Yeah.
But I own both of those that, like I said, when I look at kind of the direction of where we're going, they're not, water is hyper important, and then real estate, they're, just not producing any more dirt. So it's like, if you can get in the right dirt, and build, multifamily places for people to live, it's pretty fulfilling.
Yeah, absolutely. Two industries that are of vital importance to, life and the economy and
think so. Yeah, exactly. So, yeah. Smart. Yeah, it's funny as we're looking at, you building apartments and multifamilies. I've got a couple of projects. I've got a single family for rent product that we're actually selling a portion of it off. But a lot of multifamily, and it's funny because one of the comments is like, where are these guys going to all get this water? We've got water issues and problems. And then kind of the follow-up of that is, we've got a water solution as well. And the water solution in Utah, again, it's been a topic of conversation for the last, I can't even remember how long, since 83 when we were flooding. Since then, it's been like, as water starts depleting and droughts, at least the last 7-8 years has been a real issue. So if we can solve that and really, again, the strategy we have, we're pretty confident that we can save anywhere from 7 to 15% of the water waste in the state of Utah. If we can do that, we'll fill the Great Salt Lake. So
that's amazing.
I know I'm making some pretty bold claims, but
I love it. We need someone to help with that. And it, like you said, it's been a very pressing, item that the whole state has been concerned about. And the development, industry as well. Diving in a little bit more, Rich, to the deal with MedWater.
Yeah.
That's super fascinating, right?
Yeah.
So it sounds like you had a colleague or friend approach you with a concept. Was it just a concept, or did the company already exist?
No, it was a concept. Yeah.
And these are commercial water filtration systems that you'd install in hospital or medical facility.
That's exactly right.
Whatever it is.
Yeah.
So everything going through the building is being pumped through.
So this is actually, so we do have whole hospital lab systems. These are actually that work right along with analyzers, like blood analyzers, urine analyzers. So they need ultra pure water, which is 99.99% pure.
Okay.
In fact, our water has been tested by third-party groups that our water is actually so pure it could be used for in-body usage for dialysis, for example. We don't get into dialysis at all, just because then you've got the whole FDA and that you have to work with. But we do sterile processing and we do filtration for these analyzers.
Very cool. So love to hear about that structure. So you've got a buddy who comes to you and says, I've got this idea. How did you guys put that together? I mean, when you thought about, okay, we need capital, we need a business plan, we need to execute on this. What was the plan?
Man, I've gotten a lot of feedback on the structure because I think it's very unique. It's not. My idea was I wanted him to be motivated, and so I actually left a big portion of equity to him. And so after a certain point, we kind of had this break off. It said anything more than this is a loan to the company. Okay. So there's a loan to the company, and I get an interest rate on that money that I lent to the business. But he still maintains his ownership. So the problem I was seeing was, every time I have to add money, the challenge is we were growing so fast. And it was like, hey, we need more money for more product. We need more money for more employees. And so it was, the money I was putting in was not because, hey, the business isn't doing well. It's just, it's growing so fast. In fact, it was 3 years ago or 4 years ago was our first year. No, 3 years ago, it was like, we weren't, 8X or 10X or 12X. It was like 3X. And then I was like, oh, we can take a breath because we're only tripled in size versus, versus, 8 times or whatever we were doing. Mm-hmm. And so as we added, like I said, add more capital, I've had lots of legal people say, you dilute your partner. I mean, you're the one that's put in the money. Like, you should not be giving up as much ownership as you're allowing him to keep. But the reality is like, my philosophy might be a little weird, but I just want us all to do well. I want you to do well. I want to do well. I want any of these other guys that we've talked about, that we know jointly together. I want everyone just to do well and have a good time. Yeah. I don't really care to squash anybody's dreams. My goal is, like I said, is to really, I've started, probably 6 or 7 other businesses with a very similar structure where a friend runs it. And he maintains his ownership, and any money I put in is a loan to the business. And then my theory is eventually I'm going to get my money back, right? I'm going to get paid back. And I don't want it to flip where it's like, wait a minute, I'm running the company and you're getting half the profits, but you don't have any more money in the deal. You get paid back. So the idea is, it's kind of a little reminder like, hey, look, I helped the company get started. I helped the company, stay in business. Once my money's paid back, then it's kind of like, look, we were a true partnership. I helped you get going and that. And again, the guys I partner with these are all great people. Yeah. I think they recognize kind of what I've put out there, that it's like, it's giving them an opportunity to do something special. So hopefully we can, like I said, I just want to have a good time.
Yeah. I think that's pretty rare in a very competitive, at least here in Utah, right? I mean, there's a lot of players here. There's some that have been around for a really long time, and then there's new groups that are looking to break in. And that's the absolute right mindset to have, though, is deals come around. Everything kind of goes full circle. Like if you try to screw somebody over, or you don't want to be a good partner, or I don't know, there's this. Yeah, I think that's the right approach. There's enough to go around. There's plenty of money in this world. Let's be partnerly and try to do deals together as opposed to claw at each other's back. So
I think that's again, nail on the head. And there's people that I've done deals with and no hard feelings, and still, like I said, have friendly relationships with, that I just won't do deals with anymore. Sure. And it's fine. It's just recognize that, like, this is not going to work going forward in terms of your philosophies are different than my philosophies in terms of how you treat your partners and finding, 1 or 2 lines in an operating agreement that suggests that there's more influence or power on their side versus mine, where it's like, that's not the way this is supposed to be intended. This was supposed to be just us doing it. That's fine. That's fine. We'll stop. That'll be our last deal. We can go play golf. Yep. We can, see each other at the store and wave, but we just won't do any more deals together. And that's fine. I'm totally fine with that too.
Absolutely. So for MedWater and then AMPAC, have you had to raise outside capital for that, or you self-fund it?
Yeah.
Other ventures.
Yeah, we've self-funded. Great. Yeah, we've talked to some partners. There's some partners that we've talked to that I would love to be partners with. And we were just too far apart just because they're unique, right? Where you have a water contract that's 20 years long, and that contract is, we know it has a value to it. And with that value, it's kind of hard to sell a business at a value today or the last 12 months when you're like, look, we have the next 20 years of cash flow planned.
Sure.
And so again, and we might be wrong, which is okay too, and saying, we think this is the value, they think this is the value, and we're too far apart to really like, all right, let's come together and talk about this. And so, and again, that's no hard, again, good friends of mine that we've talked to about partnering. Yeah. And that's the other nice thing is I think with the way that I've handled or we've handled the discussions, it's not like, if you don't get this, we're done. It's like, hey, can we figure it out? And it doesn't look like we're going to be able to figure it out. And that's all right. Let's hang out next week and, enjoy doing some stuff together outside of what we've done. So, and it's actually worked well because, the groups we were talking to on the investment on the water company, are partners in some of my real estate ventures too. So it's like I said, as long I really don't want to burn bridges. I don't care to burn bridges. It doesn't, I once heard it said that I really like is, deals, unfair deals make, I can't even remember. Now I'm going to butcher what the saying was, but it was really good. It's basically like an unfair deal causes bad feelings causes enemies, and none of us need more enemies. And so if a deal's unfair, if it doesn't work, then it's like, look, let's just leave it. Like there's no reason to force it and feel like that there should be bad feelings in a structure or a deal. So, and I try to live that way, try to do that way. And again, I may not be innocent if someone's mad at me. I'm sure I've done something to upset them, or maybe it was perceived, but ultimately that's my goal, is just, again, for us to all do well.
Love it. That's a great way to think about it. So going back to your real estate ventures, so you came out of the kind of the equity brokerage business with Orchard, you did your own thing, market crashed. So take us from 2010, 2011, whenever that was.
Yeah,
so
that's exactly when.
How old were you at that time?
32.
32,
33.
So you're starting off new. I would love to hear about kind of what was your first. I love talking about the first deal.
Yeah.
Like how similar to your med water systems, but on the real estate side, what did that look like? The first one, how did you finance it? How did you find it? Partnership?
Right.
Get off the ground.
Yeah, so it was partnering with this local builder, and it actually was great. It was one of those things that I was talking to a group in Houston. They were looking for someone to help raise funds. And I told them, look, I don't want to do that anymore. I don't want to raise money for a fee anymore, which is what I was doing back in 2008. And so when the market crashed, I didn't have any assets to really produce cash flow. It was great because I'd raise money and I'd get a wire, and I'm like, oh my goodness, this is a ton of money. But then, you think about taxes, and you think about, you're like, hey, I got this. I'm going to splurge a little bit. I'm going to buy this car. I'm going to buy this. And then all of a sudden deals stop and you're like, oh my gosh, I'm out of money. So this group in Houston made me an offer to partner with them, and it wasn't a great structure, but I was like, hey, this might be a good chance for me to get back into doing my thing. I went to go work with a friend of mine who was the CEO of an import company. We imported everything from, it was funny. It's a funny story because we were importing stuff from China, and was like jewelry making, stickers, scrapbooking, just import all this stuff. And then I would go and meet with Target and Walmart and Costco. But I'm meeting with, here I am, 31, 32 at that time. And I'm meeting across the table with someone that just graduated college, 22, 23. And they're like, I don't really like your stickers selection. And I was like, dude, I don't want to be here. Make this easier on me. And can you go back and tell them we want more glitter? And I was like, that's fine. I just couldn't wait to get back on a plane and come home. And so when this group in Houston, this is in 2011, made me the offer, I was like, all right, here we go. Well, again, I talked to kind of this local developer. He was saying, hey, why don't you come raise money for me? And it's a local builder. And I was like, look, actually the developer was the first one to approach me. And the builder said, hey, I've got a project right now. And I told him, I said, I don't want to raise money for a fee. I want to be a partner. He's like, done. So it was a small deal. It was an industrial deal, 100,000 square foot industrial deal. He put up his balance sheet for the financing, so that worked well for me. The equity raise was so small. I think it was like 1.7. I say small.
Sure.
Depending on, it's all relative, right? Yeah. Now it's small.
Yeah.
But at the time it was like 1.7, and man, we did it like from, it was Monday before Thanksgiving. And by Thanksgiving we had all the money we needed. And he was like, wait a minute, like that was way faster than I thought it could happen. And so he's like, all right, let's talk about this other deal. And so talked about another deal, didn't end up working out. And then we started doing a couple of deals here and there. We partnered with this other developer. And really the catalyst was looking at kind of looking at acquisition. Because at the time in 2012, 2013, you could buy apartments for 60, 70% of replacement value.
Sure.
So if an apartment if you were to rebuild it and it would cost you $100 million, you could buy it for $60 million pretty comfortably. Right. And then your high water marks on rents were already established. And so in hindsight, like, I wish I would have bought more. And it was funny because I was so burned by the cyclical nature of the market. I was like, I was writing letters to our investors saying, man, we've had 6 good years of a run. Like, I would be very careful. Like, and then of course it just kept going and going and going. I'm trying to be so conservative. I just don't want anybody to get hurt. And so it's kind of a funny time that we're having this conversation where I'm seeing, you start seeing banks fail, and it's not even failing. I think that's the hard part. The frustrating part from an outsider's perspective is, the bank, again, I don't know enough to comment more than I couldn't see that the bank had necessarily done horrible, terrible, awful things. It was, they said, hey, we need to raise some more money to clean up our balance sheet. And immediately everyone started pulling money out. And then it's that rush on the banks that happened in the 20s that really kind of created this, awful depression. 2008 was very different. That was based on long-term fraudulent behavior on the financial markets, and that was a pretty unique situation. I don't anticipate anything like 2008 happening again. I think this will be interesting. I don't know. I thought I could really predict what was going to happen with the cyclical, every 7 years, and then you have 3 to 7 years of, trouble, and then you'll have 8 or 9 years of positive, and then it'll be 6 years of negative. And it's not a perfect circle. There's these, anyway, funny bumps. But so that first deal was, like I said, all in was, I think that all in was 5.6 million, 4 million of debt, 1.6 or 1.7 in equity. And the minute we broke ground, we started getting offers on it.
That's great.
And I was like telling my partner, let's sell. And he's like, no, let's wait. And then it was great that we waited. And in fact, had we kept it, we would obviously made a lot more. But I was, again, so burned by the market crash. I was like, hey, let's take it and roll it and put in a couple other deals, which we did. And our investors were thrilled. We've had, like I said, we've had some pretty good successes, and just trying to be smart and conservative on our approach. And then I transitioned more into development when I was going out to bid on an apartment project, and I was like, hey, replacement cost on this is, again, $100 million. I can buy it for $85 million. And the next thing I know, I hear, oh, we just got an offer for $95 million. And I was like, all right, this is, like $15 million more than I wanted. I'm looking at the numbers and I'm like, gosh, I just don't feel comfortable going to people saying, hey, hopefully this works out. Hopefully we get some cap rate compression. Hopefully we can increase NOI. Hopefully we can do this.
Yep. And
then it'll be valuable. So I'm like, I'm not comfortable buying anymore. And again, rearview mirror, could have bought for another 4 years or 3 years, but started doing some developments. Bought an old Kmart, vacant Kmart on 41st South and Redwood Road. And as I was saying, West Valley has been awesome. So bought this old Kmart, and that was really that was the real catalyst for me, was leaning hard on my development team. That was, honestly, just a good friend and his son. And we went and bought this. It was just the three of us. Actually, we put it under contract. We hadn't even bought it yet. Put it under contract and going through the entitlement process with the city. And I was into my, earnest money had gone hard. Sure. I was, 50 or 60,000 in development fees. This was really everything I had. And it was pretty nerve wracking. This is in 2000 and, what would this be? 2018 was when all this was going down. And it was funny because, I've got this beautiful plan of these apartment projects. And I went to the city council, and I'd been working with city staff, and we worked with, planning commission, and we'd go to city council, and they had created a Facebook page about how to not approve my project. And it was Facebook page. And then they have these town hall meetings at a local community center. We're like, all right, everyone show up and go against this builder. So I'm going in like happy, like, hey, we've got this great project. Staff's on board. Planning commission's on board. I'm going to go to council and present. And there were 34, if I remember right, 34 people who spoke in contrary to my project. 34.
That's a lot.
The news came out. Everyone's like, everyone hates this project. I had one person on the news saying, I don't know why they don't just turn it into a big Nordstrom. And I was like, what? This is 41st South. I don't think Nordstrom's looking to come here. And then another person's like, I don't know why they don't just turn it into a park. And I'm like, no, you guys don't even know what you're talking about. It's so frustrating. So I went and I presented, and it was funny because, like, as I'm talking, people are yelling at me as I'm presenting to city council. And it was funny because I said, look, this is news to me. I've never come to a city council where I've had people that are thinking I am the bad guy. And this lady yelled, she's like, you are the bad guy, from the back. And I was like, that's never happened to me before. Like, like, this is so crazy. I'm putting in $100 million into seven acres in West Valley City. Who else is going to do that? Right. We, unfortunately, sadly, they had actually found someone that had overdosed, and their friends had put them in the storm drain a week before that meeting. Oh, yeah. So we had found a body on our property, and I'm like, I found a body, and I'm still willing to close on this. I'm still willing to get this done. Yeah. So I actually, one of the local groups here, this phenomenal group, Keystone National, lent me, did a loan to help us take down. So we did some equity, some debt, and then we raised the rest of the equity. And then Bridge Investment Group stepped in to be my main capital source. So we've got some really good LPs, and then Bridge Investment Group made the gap there. That project is awesome. We're just starting to lease. We released, just over 100 units. We're leasing about a unit a day right now. Great. We're going to release the next 100, and then so it's a total of 430 units. And I mean, it's awesome, and it's beautiful the way that it worked in the city, how attractive it is. It's just I'm super excited. It's one of those that I'm pretty proud of. It's flying over it, you can look down and see it, and it's very distinct. You can pull it out. And I've got lots of pictures from airplanes, like as I'm taking over or flying over and taking pictures of it. So
congrats.
Thank you. Yeah.
So you started that in 2018, and now it's coming out of the ground. I mean, those entitlement processes can take
oh my goodness
a long time.
And then construction, and then we had we've had a month ago I had a phone call from the police like, hey, we've got people on your property, they're not supposed to be there. And I was like, oh my gosh, like that's the hard part of developing. Like, I'm really trying to do something to improve the neighborhood in the area. And, you just always have challenges. And that's one of the funny statistics. I really got heavy into, the data about, crime and apartments and that. And actually when you look at the numbers suggest that apartments are no more, there's no more crime in apartments than there would be in a neighborhood. But you got to think, you've got 430 neighbors stacked on top of each other. So the density is where you see the issues or problems. But if you were to take that and spread that over, how many blocks would that be? 20 blocks, right. 20 city blocks, whatever. Like, you're going to have those same issues. It's just going to be spread out. So it doesn't feel like it's all condensed there. Yep. And ultimately it comes down to lighting. If you have good lighting, you prevent a lot of crime. So it's kind of crazy.
The exterior LED lighting
it's a big deal. So. That's right.
Great. So your first project was the 100,000 square foot warehouse. And then from there, it just sounds like you've seen more and more opportunity, and you've been able to snowball relationships. So is the Rich Day Group acting as the sponsor and developer on all of your projects right now?
Yes, exactly. Yep.
And I assume having your background with Orchard and raising equity has been extremely helpful in what you guys are doing.
100%.
I'd love to ask you, Rich, how do you guys think about raising capital? I mean, what is your strategy for any real estate investment group? Your lifeblood is deals and then capital, right?
Yeah.
And so, what advice would you give for raising capital, and how have you had success?
Man, it all comes down to networking. That's one thing I would say about my education that I missed was I was just going to get the MBA because it was an MBA. I didn't do it because I was like, I'm going to really build my network, and that's where I missed. If I were to do it again, I would purposely go out of the state. I would force myself and my family situation to go, whether it's back east or, out west, wherever you go, I would go out to just get outside of your core network. Right. And so I have to force myself. A good friend of mine, he and I talk about this. He raises money but he's a registered investment advisory. And anyway, really successful guy. But it's funny because you can get really comfortable. You get comfortable with your network, you get comfortable with your relationships. And he's like, man, I don't know how you do it, how you keep going. And there's a challenge. It's a challenge. I force myself. I buy into professional networking groups. I try to participate at the highest level of that so that I get the most opportunities. Met actually recently, yesterday, from this networking group. I have a new relationship that could be really, really good. And it's one of those things that you just never know. And so I used to tell people I would never turn down a lunch offer. I still don't try. I try not to turn them down. My schedule's a little bit more difficult to manage. It's different because the lunches aren't necessarily like, hey, tell me kind of what you're doing. And it's more, people wanting you to, look at their insurance product or their financial products, which is great. I appreciate those. But what's interesting about that and those relationships too is you never know where those are going to go. And people ask like, where's your bottleneck? For me, it's not been up to this point. It's not been deal flow because we've kind of been creating our own deals by way of, I've got two big projects downtown. I've got 150 units I'm building on 9th South that was 3 vacant industrial buildings that we had to go and have rezoned and entitled into multifamily. And they're going to be awesome. And, those, like I said, when it comes to deal flow, I haven't had a shortage of deal flow because we kind of create that. But in terms of relationships and capital, I've also never gone out and done a fund. I've had a lot of people, I say a lot, I've had 4 or 5 groups that have approached me and said, hey, why don't you head our fund? We'll raise $250 million. You'll never have to worry about money again. We'll raise, $250 million and then you use that capital to go and invest. Everything up to this point for me has been direct invest. I like that model for a couple of reasons. But it is pretty stressful when it comes down to it and you're like, hey, we've got a closing that we've got to get done in, in 8 days and I'm $3.5 million short. Like, how am I going to make up the gap? Right. So that part of it's sad. But like I said, I've had good partners that have stepped up and said, hey, look, I'll do a short-term loan or, we can, put some cash in if you can backfill me, with new investors that come in post-close. And so it's been one of those things that, like I said, depending on your relationships and kind of making yourself vulnerable sometimes and saying, guys, I need some help here. I need $3 million to close this in the next, week and a half or whatever. Yep. And I've been impressed and surprised and appreciative of my network that have stepped up and said, all right, these are the terms I want. If you're willing to do that, then I'll step in.
That's great.
So it's been good.
So for you guys, if it's for simple numbers, $100 million deal and you're looking to raise $40 million, what is the makeup of that equity stack? You mentioned bridge, or, high net worth, family office. Like, how does that lay out? Yeah,
that's a great question. The bigger the deal is, the easier it is to work with institutional money. It's tough to kind of get into your first institutional deal. But you've got to kind of have, 4 or 5 deals, 5 or 6 deals under your belt. It's tough to go and start right out of college, start your first sponsorship and go right to, JP Morgan's, equity side and say, hey, I'm ready to do some deals. It's, you've got to get a couple under your belt. You got to kind of learn, the path, and then having the right partners. There's groups out there too that if you don't have the capital there, you can actually, you can pay a fee to use someone's balance sheet. And then they come in, they step in and say, all right, we will sign the guarantee. They charge you a fee to get that done. In fact, I had that conversation yesterday with a good friend that says, hey, look, on these projects, if you're doing a project that's, $400 or $500 million or whatever, and you need a big balance sheet, we'll come in and for a fee, we'll sign that. So when the makeup of that is I wouldn't do $35 million without an institutional partner. But what we do is we do the side by side where we have an institution, and then we'll take 20% kind of friends and family. What's nice about that is your friends and family get to participate as if they're institutions. Yep. So they're investing in institutional real estate at $250,000 versus writing a check for $2 or $3 million. Right. And you get, having groups like Bridge. Bridge has been a phenomenal partner for me. Couldn't say enough good about those guys. They've really, like I said, they've been mentors of mine as well. Guys that I have a ton of respect for and a ton of love and appreciation for. So again, it comes down to your network and your relationships.
Yeah, love it. And that's how we're thinking about it as well. We've contemplated a fund, and there's pros and cons to that.
Sure.
Both my prior roles were in the fund world, and where you have discretionary capital, surety of close, you kind of give up, or you have to take in a lot of headache on oversight, regulatory, analysis, and all of that goes into it. But we're thinking about it the same way, and coming from my background, we're thinking of doing direct deals, JV equity for a majority of the stack, and then friends and family for the the GP component of it. Yeah, and I think it works really well. And I think network is so important. We're doing similar things. We're joining networking groups and private investor summits and conferences, and what I've learned is there's no silver bullet to raising equity. It's just a lot of lunches, a lot of conferences, a lot of this, and just doing it repetitively over time, and ultimately you run into the right people. Yeah.
And it's funny because I think you hit the nail on the head. There is no silver bullet. And it's so easy to think that you might be able to find something, right? You might be able to find, and I've heard stories, and I know people that, I know one gentleman that was in a social situation with another gentleman, and they were hanging out and talking, and he had just sold his business. And this guy says, I'm getting into development. And he's like, well, why don't I just be your capital source? I mean, you hear of those.
Yeah.
I mean, that's like winning the lottery in those situations. It just doesn't happen in most circumstances. And so, as you said, when it comes down to it, it's about getting out there. It's about making time, and it stinks. Quite frankly, I give most of my credit to my wife. If I was in a relationship where it was like, are you going to dinner again with someone else? My wife is so good about, hey, look, this is part of the business. And she'll tell people, people ask, Rich plays a ton of golf. She's like, that's his business. That's how he connects to his investors, how he connects to his banks, that's how he connects to his real estate sources. And honestly, and on the philanthropy side, that's, it's been huge for me in giving back too. And that's a big part of, what I want to do.
That's awesome. Yeah. Well said. Speaking of your philanthropy, Tony Finau is a big name here in Utah.
Yeah.
My uncle's a member at the Alpine Country Club.
Oh, nice.
Runs into him every now and then. So I'm sure you guys have a great relationship. But yeah, would love to hear about what you're doing there and how you've done that.
First and foremost, I'll say everything you hear and see about Tony being a good person, a genuinely good guy, is 100% accurate. He wants nothing but good for everybody. I could not support a more genuine foundation. And so again, I will put that out there before I say anything else. It's, the program there is really just to help those who are less fortunate, mostly kids. So we do a lot for reading. We do birdies for books. So anytime Tony gets a birdie, donates a certain number of books, comes from the foundation. It's awesome. We do Tony's turkeys so that every Thanksgiving we give away food for families. I mean, literally feeding thousands of families every year in the holiday seasons. We do donations to schools so that the kids who don't have money to eat at home, they have a breakfast and a lunch they can eat at school that's covered by the foundation. And then we're in the process right now and approved and agreed on with West Valley City again to build a Tony Finau Learning Center. And so with that learning center, we would have not only elements of golf, but computer training, resume writing, give the kids an opportunity to meet with some other mentors, and then spend the time on the golf course because, again, golf is not a cheap sport. It's not something that you can be, hey, I'm going to pay $35 and I can play all season with my brother's mitt. It's, you buy golf clubs and then you pay for every round you go. And if you lose a golf ball, that's money gone. So this program is to allow kids who wouldn't otherwise have the financial wherewithal, the resources to go and play golf, that they can go and play at the Learning Center.
I love it. That's a great cause, Rich. And kind of stemming off that, philanthropy is something that I would love to have ambitions to do. And it's not like you have to have money to be able to do those things. But I've struggled with this just personally for me. I've thought until I have my kind of personal like money problem solved, abundance to be able to pour over kind of out of my cup.
Sure.
Like, how do you balance? And I know that's the wrong mindset, and I've shifted that. But
it's a great question.
As a young entrepreneur, you're like, man, I feel like I've got to have some stability here in my life before. Yeah. So I don't know, what was that balance for you? Like, how has money played a role in your life?
Yeah.
How do you think about that?
That's a great question. See, for me, it's a fulfillment thing. You see so many people here in Utah with the success that they've had, and guys that drive amazing cars and have amazing planes and amazing homes and you work and it's like, oh, I want these things. And then you get to a certain point, and I'm not suggesting that I've maximized, where I want to be financially, but you get to a certain point where you're like, I want to bring other people in to enjoy these things. Like I've been invited, that's actually a big part of my network. I've been invited on golf trips that I didn't have, like, as I'm paying for this is earlier, as I was getting started, as I'm paying for my round. These are really nice clubs that are, this is not, you're $15 for 9 holes. You're paying $350 for a round. Yeah. And I'm like, oh my gosh, like $350. Like, I got to put on a smile and pretend like this is okay. Like, and I'm not in a good spot to be doing this. Yeah. And so what I've actually found was, as I said, as you get to these things, you want to bring other people in. And that's where I recognize, like, this is a fulfilling opportunity. And it wasn't even, first part of it was me piggybacking. Like, somebody invited me on a golf trip and they said, hey, we've got a spot if you want to bring a friend. And I wouldn't always be like, hey, I'm going to bring so-and-so because it's going to look, I'm like, who is never going to get this chance again? Like, hey, come here, so-and-so, like, check this out. Like, and it's, a huge blessing in their life. And so philanthropy has gone that same way. I would recommend anybody who listens to this, go and find some place to do service. It's so fulfilling to be able to see the good things you do bless other people's lives. It's like giving, somebody, a cheeseburger on the side of the road. Like, it just feels good. And so I don't think it's a financial element. It's a time thing, and your time's valuable, and building your business is valuable. And there's nothing I would ever say to suggest that you take time away from something that you need as your core. Like, hey, I've got to do this to feed my family. And at the same time, even if you had an hour a month, the first foundation I was involved with was the World Joy Organization. And we would build, water wells and schools and health clinics for 13 villages in Ghana. Like, I didn't have the money to go and donate a whole bunch of money to Ghana. But what I did was I would open it up to my network, and then I would invite them to the galas that we would have, or I would send them just kind of a link and say, hey, look, we're trying to raise, $1,500 or whatever. And, you kind of put that out there, and then people kind of, come in, and then you get to see and be the benefactor of that, and that's just expanded even my network more. Being a part of Tony's has been I think, way more of a blessing to me and help to me, and not only my personal life and personal fulfillment, but networking on the professional side. I mean, the people, if I went down a list of the people that I have met or have helped me, I met a big name celebrity, and one of the biggest reasons why I got to hang out with him is I said, "Hey, I'm playing golf with Tony tomorrow if you want to come hang out." And he was like, "Yeah, I'm in." So we went, and the three of us, and I was just happy to be there. Sure. It was really those two. And I was like, hey,
Yeah.
But I've maintained that relationship, talking to this person as recently as last, Friday. And actually he called me. He needed a favor from me. It was crazy. Nice. I was like, all right, here we go. Yeah. But anyway, that was to do with the work that I'd done at the foundation, and this relationship. It's like I said, it's introduced me to a lot of people and opened the doors for me to meet others. So it's been, again, anything you can do to give back. I would look at, I think you'd be surprised at how many philanthropies are needing help, and not just like, hey, we need your help, come write a big check, but come help us plan a golf event, come help us plan a dinner, and invite your friends. And people want to do good. People want to be a part of something, and they want to see the result of something. And it's crazy what it'll do, not only for you personally, whether you believe in a higher power, whether you believe in the law of reciprocity, whether you believe in karma, something comes back from that, and it'll build everything else.
Yeah, great advice. Yeah. That's very well said. I love it. Last couple things really quick, Rich. Just what's next for you in terms of your outlook on the Rich Day Group, where you guys are trying? What's kind of your vision? Is it an X amount of units? Is it an AUM? Like, what are you trying to get to?
That's a good question. See, and I'm bad. As I was telling you as we were getting started, I need to update some of that, because I don't really have a targeted amount of units, and I have a targeted AUM. It's again, I want to do. I love what I do. It's so much fun. I mean, my wife and I joke around about it's going to be hard for me to ever slow down. Like, I keep telling her, like, all right, when I get to this point, like, I'm going to slow down. And she's like, you're busier now than you've ever been. Mm-hmm. Like, it's just because I enjoy it so much. And the reality is not so much, like I said, in terms of fulfillment, there's a lot of fulfillment building homes and seeing something where it was a vacant Kmart, where they had a lot of issues in terms of, what was happening there, to building something great. There's a lot of fulfillment there. But really, it comes down to, like, I would miss out on meeting people. I would miss out. Like, I enjoy this, like having this opportunity to come and chat with you and to meet different people that I've never met before. It's crazy. Like, I have a genuinely good time, like, meeting new people. I met a guy yesterday that is crazy, and now it's funny. Like, it's one of my new funny stories. This guy asked this other guy a question, and I'm like, that is amazing. I'm going to use that for years. And again, for me, it's just like a fun thing. So in terms of, like, what's next, I've talked to a couple of groups. I've talked to there's some groups that have asked me to be on the board of their advisors. I've talked to a group from out of country who is really wanting to invest in the U.S. that is saying, hey, we can provide you with this capital, which is very appealing. I'm talking to another potential partner who wants to actually buy into RDG. And so right now it's just kind of keep doing what we're doing. Really don't have any anticipations of stopping or slowing down. We've got a really, really, really good group of good people that have, I've actually never fired anyone and no one's ever left. So we just keep getting bigger. Yeah. And we're not huge, but we just hired a new person yesterday, and it came down to the fact that I didn't really have a need for it, but I was like, this is a good person with strong work ethic and great character. Like, we're going to find a spot for you. And even if for a little while, it's kind of like, hey, can you help here? And can you help there? Ultimately, you can train all that other stuff, but if they have good work ethic and good character, like, try and grab them, hold on to them, figure it out, because they'll add so much more value than the income or salary that they make.
Yeah, love it. Well, it sounds like some really exciting things on the horizon for you guys, and excited to see your continued growth and what you guys do. Last question. This is something I ask all my guests, but when you think about life in general and things you've done or want to accomplish. What does success look like for you? How do you define that in your life?
Oh gosh, for me, the way I would define success is being able to share it with others. I'm not the type that's, I'll play golf alone if I have to, but usually if I'm not with someone else, it doesn't scratch that itch. Like I won't go boating by myself. It's sometimes, my wife teases me because I'm always like, hey, the more the merrier. And she's like, sometimes it gets out of control. Sometimes you've got too many people, too many personalities. Like you got to kind of narrow it down. But I'm like, hey, everybody should come. And, so for me, success is to see other people enjoy or experience. Like I love that. And I've seen, because I know how I felt. I know I came, literally from the house I came in. It's crazy to see the house I grew up in West Valley to the blessings and successes that I've had to this point. And I think, man, I would love everybody to enjoy some of that. And as cheesy as it may sound, like you want, and how I started this, like I want everyone to do well. I want everyone to succeed because it's just no reason to have to stress and worry and toil over, who your enemies are and what they're plotting against you and what they're trying to do. Like I would rather just not have any enemies and just, again, have a good time.
I love it. Well, no better way to end, Rich. I really appreciate your time. And
thank you.
For anyone listening, go check out the Rich Day Group, RDG. They've got some awesome projects in the works.
Oh, thank you.
Thanks again for being here.
Of course. Appreciate it. Thanks for the time.